Alright, hello guys, and glad to have you on board again today, keeping up with these educational series. Today we're going to talk about the specific topic of staking, and particularly staking as a service. We're going to talk about Citadel, but there's not only that, it is a much broader system. We're going to talk about how important staking I think is going to be in the future. Why am I sparing a significant portion of my portfolio ahead of stakingly targeted assets? We're going to talk briefly about the Cosmos ecosystem in here as well. And let's get it started. So first and foremost, this is kind of a part 2 out of a first video that we've made previously, talking about how if you intend to somehow participate into the Cosmos ecosystem, you have to pull these tokens out of the exchanges, because this is definitely what the ecosystem wants, to invite you to get the hell out of centralized exchange and to go for self-custody. So I hope you understand everything that's been said into that video. I'm not going to go back to this. Today, we're going to say how on top of this, you can add an additional reward incentive layer out of staking. And we're also going to discuss, like I said, how big I think staking is going to be in the future, and how lots of smart money managers are going to look for staking rewards as safe assets rewards. Kind of what today they are chasing desperately, as central banks have been gasping their hands on each and every government bonds. So there was so far considered to be the safe yields we would get into finance. So kind of the reference for so many professional finance measurements, like the beta yields and all of these things. We need to have a safe layer of yields. Of course, the fact that for 10 years now, and probably we expect that to remain in the future, the central banking support on asset prices, and particularly in government bonds or bond-related products, means that we've totally fucked up this entire system. Today, no one knows what a safe yield is, and I think this is where cryptocurrency will definitely change the game. Not to mention ETH, which is now heading into some very hard level of liquidity. So it is gathering interest from smart investors, and I think they're definitely making the connection between the two. And eventually, in the near future, this might be taking years, of course, to transition to this, I think the safe yields will likely be coming from staking rewards. This is what we're going to consider as a safe reward. Of course, prices of these staked tokens will vary, just like a bond will vary in price and vary in yield over time. I intend staking to become this exact replicate. So this is kind of a big thing we're talking about, because if we were just talking about broadly asset class monetary partitions, basically the bond market has forever been the biggest market in terms of value, stored value, because of course high net worth individuals are chasing these safe yields. And therefore, like I said, as the central banks have totally fucked up that game, these guys are looking for alternatives. So this is how big staking, I think, could become in the future. Certainly not going to be a one-day switch thing. This is going to be a lot of capital inflow over the next few years into these tokens that will be stakeable somehow. Of course, there will definitely not be a dozen of them. It will probably be 1, 2, or at least 3 party in here taking most of the market shares. So the question is, who are these going to be? I've always made it clear that my personal favorites are definitely the one I favor the most in my portfolio, which I publicly share. So I definitely think ETH is going to be the leader into this game. Deflationary assets, safe yields, not crazy 20% yields onto this thing. So there's definitely a lot of interest into the value to reward ratio coming from ETH, which would definitely be considered, I think, like the standard, which today would be the 10-year yields on the US Treasury bonds. So we'll see eventually what was right or wrong. This is definitely going to take multiple years. And this is not today's topic. As always, we start up with a 10 to 15 minutes talking about the ideas backing the plan, and then we dive into some more precise stuff. Okay, so that was for the basic idea, understanding that probably in the future we'll get into safe yield measurements out of government bonds, which definitely don't relate to anything rational today, into something else that can provide sustainable yields and growth. And I think cryptocurrencies will probably support that. So it might not be just one. And of course, like I said, I definitely favor the Cosmos ecosystem. Might be right or wrong, future will tell. But today's topic is, if you intend to invest into the Cosmos ecosystem, and if you looked at the previous video, you know you need to put your tokens out of centralized exchange. And you need to stake them as well. Because if you ever hold Atom tokens or any other related to the ecosystem, there is kind of a standard that's been built into this ecosystem, which is there is a high level of inflation, and the inflation is distributed to those who secure the network, aka the stakers. So there is definitely an incentive to stake if you want to participate into the ecosystem as a whole, whether that is Atom token or other tokens built on the Cosmos SDK. So as I think this is going to be a huge part of these safe yield rewards in the future, well, if we have to stake them ourselves, I was really wondering, what could we do out of this? Because if this is about to become one big very thing for the smart money and the high net worth individuals, where there's going to be some kind of incentive layer on top of it. Just like for some reasons, there's been a hell of success for osmosis when it comes to liquidity providing. They've been incentivizing liquidity providing into the Cosmos ecosystem, and you know how gorgeous that has been since the beginning of osmosis, and it's still going on as we speak. So incentivized liquidity pools have been bringing hell a lot of attention and a hell of a lot of money into the Cosmos ecosystem. So I was wondering how we on the verge to find some gems around staking. Though, of course, this is not going to be crazy high yields like it is for liquidity providing, but still. And I came up with something very interesting, which is actually the thing we're going to talk about today, which is staking as a service. For those who intend to stake and get passive revenues from those staking things, like I said, there has to be some kind of an incentive, because if you understand how this thing works, it's basically you've got a lot of validators in which you're going to delegate to. So the best option is for you to be a validator. But of course, it's not going to happen with the Cosmos ecosystem. There's not that many validators, and you're probably never going to get as much money as required to get your own validating node. So you're going to have to delegate. And therefore, when it comes to choosing who your delegator is going to be, well, to be honest, there's not that many of a rational choice to make. There is a list of individual validators which you can choose from. And of course, the most rational thing would be the only risks as a delegator is to get slashed if the validator misbehave or is turned down. So in that perspective, I'll eventually spread out toward multiple validators to eventually avoid concentrating too much power into a single area. Well, like I said, I think this is an inappropriate way to actually go ahead for staking if it's about to be a very important thing. I think incentivized staking is what's to come. So once again, speculation, idea, future will tell. This is just a basic structure into today's reflection. So what I came up with is the first mover advantage in here, and I think I was very impressed with how smart the design of all of this has been. And we're talking today about the Citadel token, XCT. It's very, very low cap stuff. And I would never even consider talking about these things into these educational contents, because, I mean, I never ever talk about small cap coins. You know that. But this one, I really wanted to talk about it because you're not going to have to put a single cent into this thing. You're going to get it for free. So what that means is not the shittiest airdrops like you've seen in the past. It's a very smart way to distribute the capital on a very early kind of project. So I've always talked about this thing that Atom's value doesn't necessarily rely on the Atom price itself, but on all the external rewards that we could get over time. And actually, XCT token is one of these. When I say you're going to get them for free, that depends on if you have atoms. Atoms are other tokens because it's not necessarily just related to atoms, and we're going to get into a bit of more details when I get into the technicals, which I think is more than appropriate to switch to now. Okay, so when it comes to the Citadel token, like we said, the basic structure of this thing is all around staking as a service. So to provide staking services, or validating services, and to provide hell a lot of other things around that to generate revenues. Because of course, Citadel is a company, and just like every validator will take a % of the fees they generate and they spread out to the delegators, Citadel, for example, on their Atom nodes, they take out 3% fees, which is one of the cheapest out there, of course, but still, that is 3% fees, and as we're talking about quite a lot of money, that generates a revenue stream for Citadel. So in that perspective, there's not just this, but this is a company that intends, though, to make money But what they're willing to do on top of it, which I think is real smart, is to create decentralized autonomous organization of staking. So what they've been doing is, instead of being a random validator who just provide a service, gets rewarded with the fees, and then just basically makes the money and keep it for themselves, they wanted to decentralize that to kind of become a decentralized validator, and adding an incentive layer on top of that, which is exactly what I was chasing here. So what Citadel is, we're going to go real quick with this, okay? The basic structure today, which means they intend to add a lot of services to this, lending, borrowing, and a lot of other things to their wallet. I think what has the most intrinsic value today is this thing, the incentivized staking stuff. Okay, then in terms of valuation metrics, we're talking about a very, very small cap, ranking 1,645 as we speak, and in barely 1,000 watch lists. So this is really not a project that is driving a lot of attention now. But like I said, I would never ever call for you to invest into such a thing. But when you get it for free, just by basically holding some tokens, I think this is definitely worth a shot. Because in here, the incentive is basically going to be first to take the pieces of the cake. Because as most of the capital will be distributed over time, and we'll see this when we look at the tokenomics, of course, the incentive for Citadel.One is to grow, and for you is to be there among the first ones. Because the piece of the cake will be early distributed to those who came up as early as possible. So this is the reason why I wanted to share with this. To be honest, I've been coming across Citadel.One for more than 1 month and a half now, for the simple reasons that before actually willingly going public with this and spreading these things, I wanted to battle test them myself, which I've been doing for 1 month and a half. And to be honest, I've been just pleased by the current system that is provided. And to be honest, as I've been talking about that with the team themselves, what's coming next is even more mind-blowing, but we're going to keep it as what it is today. So let's dive into the white paper. All right, so what's going to matter for us is to dive down to the tokenomics. Of course, I incentivize you guys to read that thing, okay? You'll get all the details on what the platform is offering and all of these things. This is really huge platform. Very great job that's been done out there. But what we care about here today is to keep up to the economical stuff and the incentive layers. Okay, so if you want to learn how to use these things, I suggest you look at the white paper. Okay, let me just write it down to the area we'll care about. All right, the token allocation. First of all, real great stuff, because like I said, I've been staggeringly positively surprised by how the tokenomics themselves show a lot about what the company has to offer and the directions they're heading to. Because like I always said, people can talk, but what matters is what they do. Because if there is not a match in between the two, then that means they're probably a little bit more talky guys than actual action guys. So in here, I liked the fact that what I've been hearing from the guys themselves, talking directly to them, and what I see back then into the white paper and the token distribution and the vision for the future and the roadmap, which we're going to talk about later, there's definitely a match. So I like that, and that's a good point. In that way, what I'm willing to say is that if you look at this, you will see that most of the money is headed into the staking rewards. So like I said, who's going to get those staking rewards? You, the users. So half of the revenues have been incentivized in the first place for staking rewards. So they want the money to be equally spread out to the users more than anyone else. So you get the biggest piece of the cake. There has been a little bit of a public sale and a private sale, which doesn't account for that much into the total distribution. And the token prices in which they've been sold are detailed into this thing. I invite you guys to have a look at all the details. Do your own research each and every time. Then the community fund, which is of course driven for incentives. So normally this should be somehow reversed to you sooner or later. They're supposed to create some advantages, and the community fund actually receives half of the revenue stream, which is great because, of course, community funds can be driven into multiple directions. One of the directions they've been choosing to opt for very recently is to actually go for XCT buyback, which means when they have excess capital, they actually decide to buy back XCT, so increase prices. So that is somehow money going back into your pocket in another form. Then, of course, 15% goes for team and advisors with 4 years cliffs vesting schedules. So in that perspective, this is 3 to 4 years, if my memory is right. So there is definitely a long vision out there. Same thing, they're not trying to release the coin as quickly as possible. This is a business model heading into a maturity over a few years, and I would definitely agree with that. Like I said in the introduction, we're not talking about something that will rapidly go on a parabolic scale adoption. This is something that will have a rippling effect during the first couple of years and probably a lot more attention and tractions over 3 to 4 years period. So this is not a short-term investment anyhow in any way. And to make it clear, I'm not even talking about investing anything. Like I said, you're going to just get the stake drops, which means as long as you stake to Citadel nodes, you're going to get rewarded with those XCT tokens, which we'll talk about, of course, in more detail following. So tokenomics heavily distributed to the users. I love that. The use of proceeds coming from the money that has been risen with the public and private sales have been spreaded as well, very well, I guess, I would say, from the node buyouts to the development teams, which is basically that half of the money, it's 35%, 1/3 of the money goes for the tech, which means they definitely, I think, have been thinking about the growth potential and how probably the tech situation for validator will be rising over time. So they probably have anticipated by buying some more techy stuff and advanced stuff so that they will not necessarily run out of technical support over time and have to upgrade the hardware and stuff like that. So I think they've been overbuying onto this area, which is great. That also means one thing, anticipating for the future. Like I said, they have long-term visions and I want to see that in their actions, which I did. The second thing, of course, is the dev, which is a never-ending process, and they will intend to use more of the revenue streams from the community managements and all of these things into furthermore down the road developments. So this is not just a hole-in-one package delivered today and no more integrations in the future. They have a lot of plans down the corner. Then the inflation process in here isn't that complicated. It is pretty much inflation between 6 to 4. And the great thing is that just like any other blockchain into the ecosystem and Cosmos, most of this anyway comes heavily much more distributed by the staking rewards. So as long as you stake, because yes, you're going to be able to stake those XCT tokens as well. And this is something I will definitely incentivize you to do in the first place. In the XCT tokens, which we're talking about, I have no unbounding period, which means you can stake them and unstake them to get liquidity immediately. So staking the XCT token is going to be yet another incentivized layer on top of it. So let me be real clear. What you're actually going to get is that if you stake your tokens, Atom tokens, and some other eligible tokens to Citadel nodes, and if you delegate to them, you're going to get a portions of the XCT tokens that comes from the rewards they get from validating the nodes. And in that perspective, the more coins you delegate, the bigger the portion of XCT tokens you'll get. That's just proportional, okay? But anyhow and anyway, it's for free. You don't have to spend a single cent. So this is always good to take. This is a stake drop. If you stake, you get rewarded with the XCT tokens. And then on top of it, you can take those rewards, those XCT tokens, and you can stake them as well, which will bring some revenue. Though in here, we're going to see that integrated detail when we go for the use cases. And of course, inflation is intended to go down to 2% in the end. Regarding the token utility, like we said, XCT staking will bring an additional layer of revenue, and you will get you get all the math behind it to let you understand basically how the XCT tokens comes from staking are going to be spread it out, and it's not really that complicated. It's just a proportional thing. So of course, the bigger the proportion of your token around the entire tokens delegated to a certain node is accounting there. So of course, as there are not that many people today, the earlier you get, the better it is, because you're going to get a bigger piece of that cake. Same thing goes in here for the staking rewards. They are staggeringly high. Today, as we speak, they are nearly 100% a year. And of course, these decreases as more people go in. So the earlier, the better. And of course, when there's nothing to pay for, that's real great. So it's really the only reason why I'm talking about this today, because you don't have to spend a single penny to get there. You just have to delegate the coins, which normally you should do anyhow and anyway. So this is just out of randomly choosing a validator from your tokens list, from the list to delegate your tokens to. Well, in here, you've got an absolutely free incentive to do it. So you'll get a token to be rewarded with. And the thing is that, like I said, if we put it into the big picture we've talked about, I think this could become a hell of a thing in the future. It's not going to happen in a couple of months, certainly not. But I think over the years, if staking definitely becomes as big as I think it could be, these XCT tokens that you basically have got for free, as being one of the early adopters of these system, may definitely be worth something tomorrow. In that perspective, I think we have more than enough things to close up that video. I will incentivize you to eventually dig all of those details about XCT staking. How does that thing works? How do you actually sign up for those XCT rewards into the Citadel.One platform? And all of those things, I will leave the team explain all of this. They have a YouTube channel and they have all of that documentation you have right in front of you. So you can basically just go there, okay? Go to Citadel.One, XCT tokens, you'll get all the details and the links that I have referenced in here today. Before we get to close that video, I will just show you the list of eligible tokens. As of right now, the tokens are BUND, Secret, Cosmos, and IOTAUSD. They're actually integrating as well Bitcoin, ETH, and Icon and these things. But these ones are not eligible for XCT rewards for now. They are validating on quite some other blockchains, which means these are the ones that will be implemented further down the road. So you will get rewards out of these. So which is great. And I've been talking about them. What they intend to do anyhow and anyway is to pick all the winners. They know that the staking thing is a pretty early stage now. So they will try to have a broad offer on all of the top listers. But they will anyhow and anyway already know that sooner or later, these things will simplify. They will not be 15 to 20 public blockchains with staking rewards incentive. And anyhow and anyway, whichever these end up being in the future, they will cover them, because that's what they want to do. They want to provide additional reward layer and incentivized layer over staking, because that's what it is, staking as a service. And like I said, they want to go further than that. They want to do more. They have a mobile app. They want to be the one big app for stakers in which you can delegate, claim your rewards, all of these things into the same place, whether that is on your smartphone, whether that is on a Web3 based app, whether that is all of these things. They want to be everywhere, and they want to make it easy for you to be a professional staker for the future, which, like I said, smart money and high net worth individual have been piling the money into bonds for years, and they've been pulling in some trillions into these things. Tomorrow, they're very likely going to put a significant portions of that money out of the bond market into somewhere else. And like I said, I think a big chunk of that money is heading into staking coins. Though this is still a big question on which staking coins will be the leaders a few years from now. You know which ones I'm targeting right now. Might be right, might be wrong. This is not today's topic. Today we're talking about just if you are today using and investing into any of the coins that you have in here, then be aware that these coins will be listed rather sooner than later, that the ones that are currently available are probably the ones you have anyway. Though if you want, of course, feel free to delegate to Citadel. You will get those XCT tokens rewarded. Stake those XCT tokens on top of their rewards, so you'll get even more than that, and hold these guys for a long time. Maybe someday they will worth a lot more than what you will get for free today. All right, conclusion. All right, so no shilling a coin as usual. That doesn't mean you want to jump onto this thing. It's really a small cap thing, and have a long-term vision for XCTs anyway and anyhow. What I like, as I said, is something that I rarely do on small cap coins like that, is that I have digged into the projects. It caught my attention in the first place anyhow and anyway, because Cosmos ecosystem is something I like. And as I've been following the coins that have some rewards, whether that is airdrops or stake drops, I of course came up with XCT and digged below the surface to see what really was lying below. What I liked is that I rapidly came to talk with the team themselves. And I was damn pleased to see that these guys are definitely not the short-sighted visions guys, which are everywhere around the corner right now. So there are lots of people trying to profit from the vision and what blockchain could potentially do as a revolution and all of these things. Actually, that's not nearly what I've seen with these guys. They are professionals. They know what they're talking about. The CEO is actually a tech guy, and everyone else in the team is, I think, they are people that know what they're doing. And to be honest, I rarely come across these kinds of projects when they are so small caps. So I definitely normally do not put my hands into this dirt. But like I said in here, there's no financial risk. So when there's just a potential reward, and when, like I said, by doing my research, I came up very positively surprised, I can only do anything else but to go public with this. So I hope you will like that. This is probably going to be one of a kind. I don't intend to do any other small cap gems like that in the future. But this one I felt like was worth the shot to talk about. That being said, wish you guys a pleasant day. Bye-bye.